Hey everyone, thanks for joining us. I'm Lauren Hines with the Stables Realty Group here in Murray, Kentucky. We're sitting here in this beautiful 99-year-old home at 1007 Poplar Street, and yes, it is one of our current listings and the perfect spot to talk about what's happening in real estate right now, as this house has seen it all. I'm here with Rachel Denson, an experienced mortgage lender with FT Home Loans who's been helping people navigate the up and down of the market. We're going to dig into what buyers should know right now and what's changing and why there's still a lot to feel good about if you're thinking of making a move. Thanks so much for being here. I'm grateful to have you with us today.
Yes, thanks for having me. And I love our fireside chat. We've got an ambiance here.
So let's start with big picture. How would you describe the current market right now? And for someone who may be thinking about buying now or in the near future.
Absolutely. So how I am experiencing the market as a loan officer is I've got a lot of buyers coming to me with questions about where they are at on a budget standpoint, and we're having to have a lot of frank conversations about what it looks like as a first-time home buyer. And something that I educate people on and coach people on every single day is to really take a hard look at their personal budget. As their loan officer, I'm only looking at official debts on their credit report to officially qualify them for their home loan. That means I'm not seeing their subscriptions, their dine-out budget, what kind of shopping habits they have. I'm not seeing all the things that are in that day-to-day expenses. And like most people in America who are very used to convenience and luxury, we could all probably take a look at our finances and find some room to trim fat. And I think that it's one of the best times to be a buyer that I've seen in the last few years when it comes to negotiating power. Because when the rates were at the all-time low, sellers were having it their way.
Yes.
Right now, there is more inventory on the market. The average days on market is longer.
So people aren't feeling as rushed either.
They're not. They're thinking it through. They can have a home inspection. They have a couple days to mill it over, get quotes, and they know that if they come back to the seller with some requests, the seller may not have another offer around the corner right now.
Right.
So I'm seeing that for a long-term strategy of getting into a home with maybe more things taken care of, or, for lack of a better, things going your way, there can be some major advantages there. However, rates are still what they are. They're the lowest they've been in a year, but that is a kind of a charged statistic because in the last couple of years, we've done a little bit of a yo-yo. So we're still hanging out in the low sixes today, by and large, to just kind of give a general, idea off the cuff. And so with that comes taking a look at your finances, decide how bad do you want to be a homeowner? Can you take out, $75 of monthly expenses? Roughly about $7 in a monthly payment is equal to about $1,000 of a loan amount.
Okay, that's really good information for everyone to know.
So if you can take a look at your budget and keep that in mind, of every $7 you can trim fat, you get $1,000 more into your home purchase.
And it's always important, I think, for potential buyers to keep in mind that we have seen that home values have continued to increase. So even if you're waiting for what you think a rate might go down, you might be buying the same house with a heftier price tag if you wait another year or two. Do you have thoughts on that?
Yeah, I think that also along with that is that you are paying principal every month, and so you are lowering your loan balance, gaining equity. If you're in a 30-year fixed term, your principal and interest payment is not going to change. You're not subject to somebody buying your house and giving you a rent increase.
Right.
But also realizing that instead of just like holding out for the perfect house and end up blinking and renting for 5 more years, you could own a home that maybe you don't love every single thing about it, but could have appreciation over 5 years, and then get to be pickier on your next home.
Right.
There are people that I've talked to in 2020 that still aren't homeowners today in 2025, into the year 2025, because their wish list was something they weren't willing to budge on, compared to what they thought they should be getting for a house payment, it's a lot of equity
It
over
is a lot of equity.
5 years of a payment every month and principal balance going down.
Yeah, I mean, that's a sixth of your whole loan term that you just
That's a good yes.
have been waiting for.
Exactly.
Okay, so let's imagine I am a first-time prospective home buyer. I was actually in this position myself not that long ago for the first time. I'm interested in buying a home, but I'm coming in, we have an appointment, I'm ready to see you, or maybe I'm still looking for a lender. What is the first step in financing, and what documents can I anticipate needing to be able to hand over early in the process?
Absolutely. I love this question. And I love helping first-time home buyers. What I think is really neat is, even though we're a world that's powered by technology, a lot of my first-time home buyers want to pick up the phone or want to come and see me in person. And I really respect that, because they're taking charge of their finances and one of the hugest commitments they're going to make on their financial portfolio. But I like to say it truly just starts with a conversation. All you have to do is pick up the phone to get going. Send a text to get going. From there, I take the lead on really walking us through what we need to do next. If you're somebody that wants to make a specific time to have an appointment, you can come in and I'll send you an email with, hey, these are things you're welcome to bring. But again, truly nothing's required to have a pretty good conversation on the front end that is information from me to you before I start asking you for all kinds of stuff.
So you'll be able to walk someone through the process of what they're going to need to do throughout the whole,
Exactly.
It is a process of buying a home. It's not a one, conversation type situation.
And I think the car loan industry has really kind of turned things on its head, because you can answer a couple questions and get an auto loan.
Yeah.
For me, I don't want to say it's like a detective interview, but it kind of is, in the sense that I want to I start really with me asking some good questions.
Right.
I love when people are able to walk in and tell me about, do they have an idea of what they want to spend on their monthly payment? And really, what are they willing to come out of pocket to purchase? If that's zero, that's an okay answer.
Right.
But knowing those two things are really going to lead us in the right direction. As crazy as it is, the next biggest thing is to be able to have basically the last 2 years of your financial history written out.
Yeah.
So if you've had a lot of life change that has led you to change jobs or change where you live, I need the last 2 years of work history and the last 2 years of address history where you physically were located, not just what's on your license or where your mail goes. Traditionally, for every single person that I talk with. So if somebody has had a lot of change, sometimes they sit down with them and they're like, oh, I don't really know that. I'm like, well, that's something that if I talk to somebody in advance, I say, do some homework, write down these dates, because I'm going to be asking you these questions. And on the same tone, 2 years is kind of this common occurring threshold. So if you can bring me the last 2 years of tax returns and the last 2 years of W-2s, your most recent 2 pay stubs, your most recent 2 bank statements.
Okay. I'm getting two.
Yes. Those are things that I may ask for. Every loan is truly different.
Right.
So it may be that I don't need your tax returns, or we only need 1 year of W-2s. But for people who want to be proactively prepared, I like that 2 method, because it's just easy. And usually somebody who's making the time to walk in is good with doing some homework on getting all that stuff together. Because again, the home loan experience is really me hearing all about your finances and listening and gathering all kinds of information and compiling it nice and neat on a federal document.
And there are going to be different programs that you may qualify for based upon all these things that you just mentioned. And that's why working with a local lender, a person that you can pick up the phone and call, is so important. Because if you're doing it online and just clicking boxes, like you might apply for an auto loan or a credit card, you don't get to have somebody walk you through these steps and help you determine what documents you are going to eventually need.
Well, and 2 cautionary tales there is that when you work with somebody who makes their entire living off of being a home loan officer, you really know you're dealing with an expert.
True.
And you're working with somebody who is it's more of like a financial advisor where you're talking to them from start to finish. They have a long-term rapport with you. It's not transactional. It's truly like an advisory based business, and it's not like, okay, I'm going to do my part of the job and then I'm passing you off to underwriting and, oh, I don't know about your file, you'll have to call this person. There's none of that, because my name is on the document and I want you to think of me long term, just like you would think of your realtor when you're ready to buy or sell again. So it's not transactional, it's really relational based. And then the second thing is about the online lending, and something that I know you as a realtor have unfortunately run across in the 11th hour is when you enter that information in, sometimes companies are not fact checking you. So if you happen to add an extra zero onto your monthly income, they may not ask you the right questions and just say, congratulations, you're pre-qualified. And then don't do any kind of quality control and having a true like one-to-one, human-to-human conversation about, tell me about your work. Oh, what's your hourly rate? And do you usually work 40 hours a week, or are you only guaranteed 32? And then I'm in the background doing some math and double checking what you may have given me online on my personal application before you walked in. I'm like, that thing doesn't match. That doesn't
add up, right?
Exactly. You can't always trust that that's happening when you're trusting technology to do what it's supposed to do when they're assuming you're feeding it accurate information. That shouldn't be on a consumer.
Yeah, you're right.
You shouldn't have that kind of responsibility. So.
And it's really helpful to have someone who can walk you through the process, who's making sure that the math is mathing, right?
Exactly.
And that you're able to, be able to comfortably afford the house that you're looking at.
Exactly.
And not something that's going to be an unrealistic dream.
Yeah, or not talking about all the ins and outs of a monthly payment, or underestimating what's called escrow. So that's what for taxes and insurance. Sometimes there are people that don't do due diligence on what really your market's taxes is, or have an accurate idea of what an insurance premium is these days. I know, and it can change your monthly payment by, $300+.
Sarah and I bought, my sister, who's also an agent with our Stables Realty Group, she bought shortly after I did, and she bought at a little bit higher price point. And I know that she was concerned that she'd have a higher payment. But it turns out that it was actually lower because I live in the city and she lives in the county.
Yes.
And so that made enough of a difference that, over the long term of the loan, it actually lowered her monthly rate a little bit less than mine. So thinking about this, and one of the things that I've been talking about to anyone who will listen is first-time home buyers, and especially those younger generations. Right now, the National Association of Realtors just put out information that the average first-time home buyer is 40, and that is an all-time high. And so I think it's so important for the younger generations to be able to, even if they're not quite ready to take those steps of buying a home, they need to know what they need to do, right? What that future is gonna look like. So what are some of the financial steps that someone can take right now to assure that they're gonna be able to buy a home in the future?
Absolutely, I love that. So one of the biggest things that come to mind, and this is kind of a no-brainer, but it is important, is if you get credit, if you take on debt, having a late payment of 30 days or more is going to follow you for up to 7 years.
And even on those store credit cards.
Yes, even on those store credit cards, even on Shop to Pay or Affirm, or Affirm accounts are now reporting to credit. And there may be more and more that are added, as time passes. So take it seriously when you commit to a liability. And it goes for student loans too. It's easy to get student loans and they roll up on you. And two things on the student loan front. One, if you're in deferment, we are calculating your proposed student loan payment off of either 0.5% or a full percent of the balance.
Wow.
So if you can just bite the bullet and get yourself on an income-based plan, you could have technically on paper for your home loan a lower monthly payment that way than just being like, oh, well, they're deferred because I don't get to use zero just because you're deferred.
And you don't know how long they may be deferred
Exactly. Second thing on that note, it is so important to, if you're somebody who's doing a lot of the moving around, changing emails. I mean, I know I got my email when I was very young. I do not have the same email now. Or you got your college email and it kicked you off, whatever that looks like. That the student loans, when you get them at 18, 19, 20, they only have what you gave them then.
Right.
So if you're not being responsible and updating those data points, they're going to send you notices about deferment that are going to nowhere. So
Right.
if like your deferment lapse or whatever, and then they're going to report you to collections that you're 90 days late if you quit paying and your deferment lapse.
And you never knew.
Right. So take those kind of liabilities seriously. The second piece is be realistic about what the difference is in rent and house payment from the gate. If you know you have a really good rent, try to give yourself the discipline of putting a couple $100 extra back towards a proposed mortgage payment from the start. So you basically are making yourself pay a higher housing expense. I see if you're sharing with roommates, that cost is usually so much more effective than even going out and renting on your own, especially buying on your own.
Right.
And so trying to make yourself have those disciplines on the front end is really important.
And then you could put that money in a savings account, get interest, right?
Exactly.
Trying to work towards a down payment one day.
Exactly.
Okay. So Rachel, what are some creative solutions for those who are entering or who are trying to enter the home buying market right now?
Yeah, absolutely. So the first just general sentence I want to say is that there is so much to home loan lending. Like the government does, there are a lot of rules and nuances from loan type to loan type.
Right.
And when you work with a loan officer who knows home loans, like similar to maybe you think of a super good CPA knowing tax law and knowing workarounds and ways to take the advantage of the way the laws are written.
Right.
Home loans are similar. And as a loan officer, I know product nuances, usually off of the top of my head, but also know how to operate the manuals to read these fine prints, ifs, ands, and buts, to make sure that if there's a way that we can get somebody to work on one loan, even though maybe they don't work the traditional way.
Okay.
It's not even necessarily creative as much as it is just using the tools at bay.
So which, box you might fit in best may not be even the one that you anticipate.
Exactly. Or by the first look, this doesn't look like it may work. But if you work with somebody who knows the handbooks back and forward and ask underwriting the right questions, there could be more gray area or ambiguity to get more information from you to get a specific approval.
Oh,
It's really, I say it's kind of almost like playing Sudoku.
Okay.
It's very
this,
fix this over
move
here.
this.
We got to fix this. One of the things that that comes to mind when you say creative financing, which in my world is not all that creative. It's a very normal thing, but it's asking people that are other responsible figures in your life if they're willing to help invest into your home loan journey with you. Two of the biggest ways I see this happen is either through gift funds, because you can get gift funds for down payment from a relative, and really that definition is pretty broad in itself.
Okay.
And all that takes is just them saying, hey, this isn't a true gift. It's not
No strings are attached.
right. This is not going to be a note liability promissory note payment. And that down payment can help you qualify for a different loan type. It will, every time, more money down will help lower your monthly principal and interest payment compared to less money down. And it can fill a gap that could totally make a game-changing difference for somebody. And so when I see somebody struggling to qualify, that's one of my first questions. Usually that's coming into play of, hey, is there anybody in your life that could give you a gift?
Right.
The second thing, it's a little bit of a bigger ask, but it is, could you be a co-borrower with me? So being a non-occupying co-borrower on several different loan types helps add income to the application. Typically, we're in a gig economy at this point.
Yeah.
So I've got a lot of home buyers that maybe have not been doing their gig for 2 years and it's not on their tax return. or they've got a commission structure to their employment or bonus structure that hasn't been consistent or stable enough to be considered qualifying income in the eyes of the loan. So when they're looking at their personal budget, they've got a huge line item of income that I have to totally scratch. And so they're telling me, Rachel, I can qualify for $700 more a month in a home loan. Like, I'm comfortable with that.
I can afford it, right?
Yes.
But because of my history, it's not, your paycheck every week or 2 weeks.
Yep.
It's harder for them to qualify.
Because of those nitty gritty rules that say all these ifs, ands, and buts on income. Sometimes it's easier to see if we get a grandparent with fixed income and a paid off house, if we can add them as a co-borrower on a home loan. I mean, at the end of the day, it's very similar to co-signing on a student loan.
I was going to ask if it's like co-signing something.
When you are a co-signer, it's on your credit report.
Right.
So just like if somebody lapsed in an auto loan that you co-signed for, they lapse in the house payment. It's the same thing. And credit is on the line, but no more than if somebody was willing to co-sign on another kind of debt for you in their eyes. You're the one that's going to lose your house if you don't pay. So those two things are questions I immediately ask when somebody comes to me and we're not getting a qualifying scenario that they're pleased with. Those are my first two go-tos.
Okay, that's wonderful advice. So let's kind of shift gears. Maybe you have already bought a home. Right, we've been talking a lot about first-time home buyers, but maybe you do already have a home and you are wanting to maybe upsize, even downsize, right? Or just move, get something different. So a lot of potential buyers right now also need to sell a home. How does the current lending environment affect those that are making that double move, those who are looking to buy but also need to sell?
Absolutely. So there are so many ways to go about buying and selling. If you are somebody who has a lot of your equity tied, or a lot of your assets, illiquid, tied up in your home and you need your home to sell, we're going to have a certain conversation. A more creative solution for somebody who is a little bit more financially robust. I say that knowing that there are some people that don't realize that it's this simple, but oftentimes just because you maybe have used a minimum down payment loan once before, you can still get another minimum down loan, like a 5% down conventional loan. And as long as you qualify for your new mortgage and your current mortgage and have the 5% down. Now I know those are, again, lots of ifs, ands, and buts and kind of a steep.
And every situation will be different.
Exactly. But what's cool is there is something called a recast, where if you were to get a 30-year fixed mortgage and not sell before you bought, used money elsewhere for down payment, and you could handle that mortgage payment, but really in a perfect world, you'd love to take your funds from selling and apply those to the current balance. A recast is usually a smaller fee, typically around $250, versus a refinance, who typically is over $1,000 all said and done, to lower the principal balance of the home loan without having to get a brand new loan. So you can do a recast post-closing, not have to go through a whole entire refinance process, and apply those funds so your principal and interest payment is changed and gets lowered, but nothing else on your loan structure changes. So even if that's a year down the road, well, you have taken 12 payments off of that 360 payment term. And so you're not even starting over with having to get a new 30-year term. So there's a lot of solutions. It is a time in our market where it's a lot more conversations. And it really may be doing a few steps of due diligence between working with an agent that you trust on getting an idea of what your home could sell for.
Right.
And then also realizing that everything we do, we can qualify with the contingencies. Okay. Meaning, like, you don't have to have your house under contract to call me.
No.
In the same tone of, if you want to use those funds to pay off maybe a car payment or credit card debt, and we decide that really it makes more sense to use funds from selling your house to consolidate debt, we can mark all those things as contingent on happening when everything closes. So we can really talk a lot of hypotheticals.
So there's a lot of options.
There is, and there's a lot of playing with this scenario and that scenario of really what's best for you and how do we get these dominoes to fall in a realistic way. Because I like to say realistic because that in this market may not necessarily be ideal.
Right. Okay, fair enough. Good point. So what are you most encouraged by in the housing market right now? Are there any positive trends or stories that you'd like to share with us today?
Yeah, absolutely. I'm just really encouraged by all of the first-time home buyers and people in the market that are not being rushed into their next move. It's really a time where we've been able to develop really good rapport with our clients because we're not rushing out of the gate like we are in markets where interest rates are lower and activity
and everybody's a fluster of activity.
Exactly.
Yeah.
Exactly. And so people are being more thoughtful with their finances and are getting the time they need to have proper negotiation conversations without fear that if they make one wrong move,
they could lose the house.
Exactly.
Yeah.
And having trusted realtors like you all are what make a huge difference in that as well.
Oh, well, thank you. And it is so important, and I agree. I do think it's nice right now that people are able to take their time a little bit more and not feel quite as, we have to get an offer in by end of business today, the day that it comes on the market. So
exactly.
It's a little bit different situation than we were in before. My final question, if someone is out there, maybe they're watching, they're sitting on the fence, they're like, do I buy, do I not, do I sell, do I not? What's one piece of advice or encouragement that you would give them?
Yeah, my one piece of advice is it costs $0 to ask questions.
Okay.
Get off the fence, call us, find out what are specifics for you, because I firmly believe that if you have a conversation with trusted real estate professionals, your loan officers, have buyer consultations, selling consultations with realtors, that you're going to be more educated and more informed and can do something in the next maybe 6 to 9 months of waiting, even longer, to be more prepared 6 months from now.
And all it takes is a phone call or even a text,
yes.
right?
Like I say, free 99.
There you go.
We're giving out free advice all the time.
So it is important that you can have, a consultation with your realtor or any potential realtor. You can have a consultation with Rachel to kind of understand what moves you need to make to be able to start the home buying or selling process.
Absolutely.
This has been such a great conversation.
It has been.
Thank you, Rachel, for sharing all of your insight and helping us make sense of what's happening in the market right now. For anyone watching, if you're dreaming, about your first home, thinking about downsizing, upsizing, or just making a change, there's still plenty of opportunities out there, especially when you have the right people guiding you. So our team at the Stables Realty Group would love to help you take that next step with confidence. You can give us a call at 270-992-8774 or find us online at www.stablesrealty.com. We're always happy to talk about your goals and the best path forward.
And I'm Rachel Denson with FT Home Loans and can be reached at 270-293-2345, or you can find me on Instagram and Facebook at Rachel Denson _MLO.
Thanks for joining us in this beautiful historic home, and here's to finding the place that feels like home to you.